three types of traders, guys, that we reference, and this is just pretty much industry standard stuff: retail, commercial, and institutional traders. So the retail traders are the individuals like perhaps yourself and myself and many, many others. I like the terminology of home gamers. I believe Jim Cramer coined that phrase. At least that's where I got it from. But yeah, so home gamers, always liked it when he said that, and I was like, okay, well, that's great. That basically references the retail traders around the world. The next is going to be the commercial. So if we ever reference commercial traders or something to that nature, we're referring to corporate entities like your pension fund managers and so on. And then finally, there's the institutions. So your banks, investment firms, your Goldman Sachs of the world, your Bank of Americas, and so on. So in our opinion, the institutional traders are the ones who control the markets. And let me backtrack. Let me actually recant that statement. What I want to say is not the institutional traders, but the institutions themselves. And the reason that I say it like that is because, I don't know how much we all know about trade desks and so on and so forth. But these large institutions, typically they'll have levels of traders, and some are managing money for their customers and clients, and then some are literally managing the company's money, right? So more so what we're referring to are the literal institutions, not the guys managing money for other individuals. So this is just a statement that we're making here, and it's not it's not to say that it's true, right? But it's just an opinion, and we all have those, and we're entitled to them. But it's important, and perhaps we should word it differently. But we would say it's very important to be able to locate the institutional buying and selling on any given price chart. And the reason for that is no matter what methodology you use, no matter what strategy, it does not matter. There is not a single one out there that wouldn't benefit from having this information. Let me give you an example. A hypothetical is you use a moving average crossover to buy. Okay, well, probably most of us are familiar with that. If not, that's okay. I'm simply saying a very basic entry strategy. When this occurs, I buy the market. Okay, so in that case, keeping it that simple, that's great, but probably you've noticed that you get stopped out, quite a bit, right? Or your win-to-lose ratio is not as high as you'd like it to be, and so on and so forth. So if you had the ability to say, define where the potential institutions are buying or selling, now you've increased your probability, because instead of buying every time you get that moving average crossover, you can simply wait until it gets to that location and then buy your moving average crossover. So it has its advantages. It's not just for solely trading the zones, albeit that's what we do, but again, it can be advantageous for any trading strategy in our strong opinion.